Welcome back, everyone. Today we're diving into what Singapore's top banks DBS, OCBC, and UOB revealed at their recent annual general meetings. If you're an investor or just curious about how these banks are navigating trade tensions, interest rate changes, and dividend plans, this video is for you. Many investors are wondering, should I hold my bank shares, sell them, or buy more? What's the outlook for 2025? We'll break down the key points from the AGMs, including how the banks are helping businesses cope with trade wars, what the dividend plans look like, and how they're preparing for expected interest rate cuts. Plus, I'll share practical tips you can use to make smarter investment decisions. Before we jump in, if you want even deeper insights, for just $1 a month, you can become a premium member. You'll get exclusive daily market analysis, early looks at promising trends, and detailed investment strategies. Think of it as your daily dose of financial fuel to power your wealth journey. More on that later. Now let's get started. Trade wars remain a big concern for Singapore's export-driven economy. At OCBC's AGM, the CFO shared that nearly 70% of their business clients expect profits to shrink because of tariffs. Many are shifting production to countries with fewer tariffs to stay competitive. But this supply chain reshuffle is complicated and will take time. Some sectors are less affected by tariffs: construction, food and beverage, renewables, and data centers. Data centers especially are booming because digital demand keeps growing and they don't rely heavily on cross-border trade. The banks are adapting too. DBS is expanding trade financing in ASEAN markets. OCBC is focusing on supply chain loans and digital tools to support clients. UOB is integrating its Vietnam operations to help businesses navigate cross-border challenges. Why does this matter? Banks are the engine that keeps businesses running. If they can help companies survive trade challenges, they're more likely to keep growing and paying steady dividends. So watch for trade loan growth as a sign of resilience. Dividends remain a big draw for Singapore bank investors. This year, all three banks announced solid dividends plus special payouts. DBS is offering about a 5.6% forward dividend yield with an expected dividend per share of SGD 2.40 in 25, up from SGD 2.22 in 2024. OCBC's dividend yield is around 5.9%, and UOB's about 6.2%. UOB even gave AGM attendees a SGD 30 cash card, a rare and generous gift that almost equals the price of one share. Imagine buying a share for around SGD 34.77 and getting nearly 100% return just for attending the meeting. Compared to Singapore's 10-year government bond yield of about 2.3%, these dividend yields are very attractive. For income-focused investors, these banks remain a solid choice. Interest rates are expected to fall 2 to 3 times this year as the U.S. Federal Reserve eases. Lower rates usually squeeze banks' net interest margins, the difference between what banks earn on loans and pay on deposits. Here's how the banks are preparing. OCBC has about 60% of loans on floating rates, so they can adjust quickly to rate changes. They're also growing wealth management fees, which are less sensitive to rates. DBS plans a SGD 3 billion share buyback and aims for double-digit fee income growth. UOB is focusing on sustainable loan growth and profiting from China, not in China, meaning they're cautious about direct China exposure but still benefit from regional growth. Think of banks like a business. Interest income is the main revenue stream, but fees and wealth management are like side hustles that add stability. Looking at key health metrics, OCBC leads in margin efficiency and asset quality. Its net interest margin is about 2.2%, cost-to-income ratio 39.7%, and non-performing loan ratio 0.9%. DBS's net interest margin is 2.3%, cost-to-income 39.9%, and NPL ratio 1.1%. UOB is a bit more conservative with a 2.03% margin, 44% cost-to-income, and 1.5% NPL ratio. Attending an AGM isn't just about freebies, though. That SGD 30 cash card from UOB was a nice bonus. It's about hearing directly from management, asking questions, and getting a feel for the company's culture and strategy. UOB's AGM felt like a first-class experience, with warm greetings, clear presentations, and a focus on shareholder care. OCBC and DBS also showed strong engagement with clear strategies on wealth management and regional focus. If you've never been to an AGM, consider attending one. It's a great way to learn and connect with your investments. So what should you do next? Mark your dividend calendar. DBS offers quarterly special dividends, and UOB's big special payout is expected in Q3. Watch trade loan growth as a sign of banks helping businesses adapt. Prepare for rate cuts by tracking DBS's share buyback and OCBC's wealth management fee growth. And if you can, attend AGMs to learn firsthand. To sum up, Singapore's top banks are navigating 2025 with a mix of caution and opportunity. Trade wars are a challenge, but sectors like data centers and renewables offer growth. Dividends remain attractive, with yields well above government bonds. Interest rate cuts may pressure margins, but fee income and wealth management growth provide a buffer. DBS is the aggressive growth player. OCBC balances efficiency and stability, and UOB plays it safe with conservative growth. All three remain solid pillars in your portfolio. If you found this video helpful and want to level up your investing game with daily premium insights for just $1 a month, click the link in the description below to become a member. You won't regret having that steady stream of valuable information to help you grow your wealth. Don't forget to like, comment your thoughts or questions, and subscribe if you haven't already. Your support helps me keep bringing you these insights. For your next watch, check out my video on how to spot dividend stocks that keep paying even in a crisis. It's packed with tips to help you find reliable income sources. Thanks for watching The Investing Iguana. See you next time. All data and figures in this script are accurate as of early May 2025. DBS is trading around SGD 42.70, OCBC at SGD 16.15, and UOB at SGD 34.77. Dividend yields and financial metrics reflect the latest available information.